Options somehow can be seem tricky, but it is something everyone wants to learn.
SEBI had set up committee which was chaired by Dr. L.C. Gupta. This committee was appointed to lay down the framework of the derivative market. In June 2000, the millennium year, index options started trading. The stock options and the stock futures also started trading in India. It's been around 25 years in India.
It's been around 25 years.
That's how majority of the people they know F&O.
Yeah.
I use this particular platform of Strike Analytics.
Hello everyone, and we are back with another series on options trading. A lot of our viewers and subscribers were commenting to get a video on options. This is Nimisha Saxena, the social media strategist at Strike, and as always, we have Zubin with us. Zubin has a rich corporate experience, and for the past 15 years, he has been a professional trader and a trainer, and today he will help us move forward with options. Options somehow can be seem tricky, but it is something everyone wants to learn, including me. So before we begin the video, I want you all to please like, share, and subscribe to Strike so that we can share the knowledge and help people who are beginning with their stock market journey. And the first video is all about derivatives.
Great, fantastic. So, welcome all of you. In this first video, we will be speaking about what are derivatives first. And Nimisha, have you ever wondered when did derivatives emerge? So derivatives emerged. They started trading. So they are nothing but contracts. All right. There is a buyer and there is a seller. So the first contracts of derivatives they were traded in somewhere around 12th century in the European trade fairs where people bought and sold derivative contracts.
Yeah.
All right. Later on in the American markets and in the rest of the parts of the world, the derivative contracts, were, they were traded very nicely. All right. But in India, in 1996, SEBI had set up committee, which was chaired by Dr. L.C. Gupta, and he was appointed. This committee was appointed to, lay down the framework, regulatory framework of the derivative market.
Okay.
All right. And after a lot of hard work, after a lot of research, finally in June 2000, the millennium year,
Yeah.
all right, index options started trading. From July and November 2001 onwards, the stock options and the stock futures also started trading in India.
Okay.
All right. So basically, it's been around 25 years in India.
It's been around 25 years. Yeah. So could you just let me know that, yeah, it was all about how it started in India. But who are the, market participants who can participate in derivatives?
Well, everybody, the retailers and the institutional people, they participate in the derivative markets. But, these market participants are classified under three major categories.
Okay.
The first category of people are called as hedgers. Hedgers means what? Hedgers means, those people who don't want to take risk. They, they give away their risk by trading in the derivative contracts. Okay, so they are, they are said as risk mitigators. They pass on the risk to other people. Then who will take on?
Yeah.
So the second category of people, they are called as speculators. Now, I think majority of the people trading in the market, especially in the retail segment, they all are speculators who take on the risk. All right. So that's why you said that it's very risky. People feel it's risky. Hey, derivative contracts are designed to minimize the risk, but if you speculate, you will take on the risk, and hence it is very risky. Okay, so they are called as speculators. And another type of participant is called as arbitragers. Arbitragers are nothing but those traders who buy in one market and sell in another market.
Okay.
To make a profit from the price difference between the two markets of the same asset class. All right. So these are the market participants.
Okay.
Right.
So I had one more question. Moving forward with it, like in the stock market, if you can just provide a proper structure, how options, trade-ins, and how basically the stock market works. A
Okay.
short structure, if you can tell.
All right. So this entire stock market, all right, is divided into two parts. One is called as primary market, and another one is called as secondary market. All right. Let me tell you first about secondary market. Secondary market is anything that you trade buy and sell
Okay.
from the stock exchanges. That is the National Stock Exchange of India or Bombay Stock Exchange
Yeah.
of India. All right, through the stock exchanges, whatever shares or anything, any asset class, be it commodities or currencies, all these are classified under secondary market transactions.
Okay.
All right, and what is primary? Have you applied for IPO?
Okay.
So in IPO, what happens is IPO, you as a trader or as an investor, you deal directly with the issuer from the company itself. So all the corporate actions like bonus shares, dividends, buyback of shares, all these transactions are classified under primary market. All right. Now this secondary market is further divided into two parts. All right. One is called as cash market segment. All right, and the other one over here is called as derivative market segment.
Okay.
All right, so cash market segment means what? Cash market segment means the normal shares that we buy and sell from the exchanges. They are called as cash market segment. All right, now the derivative markets. This derivative market, there are two types of contracts.
Okay.
Okay, the first type of contract is called as futures contract.
All right.
All right.
Futures and options come under derivatives.
Absolutely. And the second type of contract is called as options contract, F and O. That's how majority of the people they know F and O.
Yeah.
All right. But F stands for futures, O stands for options. And this options is further divided into two parts. There are two types of options. The first one is called as call option, and the second one is called as the put option.
Put option. Okay.
So in this particular series, what we shall be doing is we shall be focusing on the options contract over here, the derivative contracts, where what is a call option, what is a put option. All right, all these things one by one we will take care of it.
Okay.
And by the way, let me also share with you where it's all about data analysis, options analysis, all about data analysis. So I use this particular platform of Strike Analytics. All right, and in Strike Analytics on the dashboard itself, you will see there is a future activity, there is options activity. On the left hand side over here, we have entire option based on futures. What is OI built up? What is rollover? All these things we will be learning. In options as well, we have open interest, multi-strike OI, max pain, volatility, put call ratio, all right, option chain.
Correct.
So what is an option chain? All these things, we will be learning in videos one by one.
Okay.
Right.
So thank you so much. I think viewers, you also got to know about the basics of derivatives, and the options and futures come under the derivatives. We have covered about the technical analysis as well in our previous series. You can go to our YouTube channel and you can see the entire series which is there. Also, please like, share and subscribe to our channel Strike so that we can just forward our knowledge to help everyone who is starting their stock market journey.